next video is going to be about uptrends. Uptrends. The first direction that the market can move is uptrends. Prices making higher highs, higher lows, higher highs, higher lows, higher highs. I guess this low went a little bit lower than this previous high, but technically it's still higher than that low. And then boom, we just made a higher high. This is a valid uptrend right there. Super solid, super clean. And of course, that same thing can be seen on any time frame. Right now we are on the weekly time frame right in there, but that same uptrend can be seen anywhere. And as we zoom in to what happened recently, we had previous all-time highs get broken. So that's super important right in there. Here's the same area, but on the daily time frame. Even the 4-hour may look a little bit better. Let's check it out. Just massive uptrend. The market is just moving very beautifully. As we see here, price is making higher highs, higher lows, higher highs, higher lows. You can use this one, higher high, higher low, higher high, higher low, and then price moves sideways like we talked about earlier for a little bit, and then it makes another higher high, higher low, higher high, higher low, boom. I'm just going to the ends of the wicks, boom, over and over. And then price decides to drop even lower than this previous higher low. So yes, we did get a minor shift in trend temporarily, but this low here is still higher than these lows, this one, these. So we're still overall uptrending technically. Let's zoom out a little bit, and we see here, let's just make this a different color. Let's just say that's black and then 4. All right, so let's just say we're doing this: higher high, higher low, higher high, higher low, higher high. Same thing, same uptrend, but once you zoom in, you see more of the technicalities, and you see more, highs and lows. But on higher time frames, going back to even the monthly, it looks a little bit different. It looks a lot different. You're not seeing a lot of ups and downs. It's mainly just one direction. This looks like one huge up, and then one huge down, and then one huge up right there. That's called an uptrend. So as price works its way back down, then we'll be able to see what it wants to do next. And that's what it's doing now. It's working its way back down, and we're going to see what happens in these areas, catch these next buys as a group and the Discord together, and continue moving up. Boom. But we shall see. Anything can happen. Just because you have some type of Picasso painting on your chart and you think you are, you have the best markup in the entire world, the market does not care. It will clap you for no reason. But it's all about structure, and that's why we're going over this video. There can't really be a market without the structure. That's why it's called market structure. And that's why it's also important to learn what it is that's an uptrend. I'll break it down a little bit more. I'll label it for you: higher high, higher low, higher high, higher low. Boom. This point here is the higher high, and then this down here would be the higher low. Boom. Boom. If this was the beginning of the the chart, then it would just be a high. Technically, high comes first and then low, and then after that it becomes higher highs and higher lows. Technically, first a high gets created, and then a low gets created, and then a higher high gets created. But with English, you can't say this is a higher high. That would be crazy. And no one's gonna say that. But that's how we do it. That's an uptrend. Last but not least, mark up the highs with a straight line. Boom. We broke. The only way for price to go higher is if we break structure. A higher high cannot be made unless price travels high enough to break the previous high. We have to break structure. So anytime you see a line drawn horizontally across a high or a low, that means we broke that structure. So if you ever see a chart that has BOS, that means break of structure. The structure has been broken. Think of a structure as a building, a roof, a floor, and if price breaks through that, you broke the structure, you broke the roof, and you made a higher high. Right? That's called a break of structure. And then after that happens, we like to look for entries, for buys at that same structure that was just broken. You want to confirm that, hey, did we really just break that structure, or was price just doing that to make us believe that? Sometimes price likes to play with your psychology and your emotions, and it'll pretend to do something when it's really trying to do the opposite. There's a lot of mental gymnastics and emotional damage that comes along with this, so you have to be prepared for that. Luckily for you, I'm cutting the learning curve. Like, this information is so important. If you can understand this right here, you will have a lot of success in trading just because you understand the foundation, you understand the basics, you understand the fundamentals, you understand the structure. Like I said, there can't be a market without structure. So if you can understand that we broke structure to the upside and we came back to retest that area to confirm, and you look for places to get in at those areas, you'll be pretty well off just based off that. I'm not saying you're going to be a millionaire overnight and you're going to, no financial claims, anything of that nature, but just know you're going to have a very solid foundation. You're going to have extreme confidence when you are in these markets. You're not going to be guessing, or because, I feel like, no, you're going to have pretty solid concrete evidence. Like you are a lawyer trying to, defend a case. So get ready for that. I'm excited for you as well. I'm excited that we're remaking these videos, diving a little bit deeper, revamping, and I hope that makes sense. It's pretty clean. I might have to screenshot this just for the Discord. Hold on, can't let this go to waste. And I would also put buy limit. That's where you would place your buy limit. And I'll also show you an example on the chart itself. I'm gonna leave that in there. Authenticity. But as you see on the chart right here, this is the NASDAQ making an uptrend, and we would love to catch more buys at this area. Let's go to the daily. It may look better on the daily. Again, prices breaking structure. We broke above these highs. We were looking for buys here at one point, but price never came back to give us that, and that's fine. It doesn't always have to come back to that area. No need to force it or rush it. What we did notice as well, we also called this out. Unfortunately, I did not hold like I should have. I did take some profits, which is fine. One thing I know, you can't go broke taking profits, but I always preach hold at least one position. And this is a prime example of why I say that, because as we see here, we broke structure. We have a high here at this wick. These are all highs right here, as you see, but I marked up the highest one, which is right there. And as we see, price did full body candle, not just the wick, not just the wick. You need the full body, the block. You need the body of this candle to break above the high, to close above. That's the break of structure. Once that happens, that retest, like we talked about, that's where you want to get in. And then look what happened. Price did play around for multiple days. Before I even go on, I'm showing you a prime example of the emotional damage that the market will essentially give you for all kinds of reasons, to make you not trust the trade, to make you pull out early and doubt, but trust the setup, trust the structure. But this was June 3rd all the way until June 23rd. So 20 days of price playing around at the place that you entered your position. So one day you're in profit, next day you're back to break even, and maybe the third day you're negative, and then the next day you're profit and then back to negative for 20 days. Can you handle that emotionally when there's real money on the table? It takes time, but that's why we under leverage as well. So boom, 2,000 points with just one position. But it did take a few months. It took about 3 months, 90 days. Little over 90 days. That's one position. 90 days to make 2,000. That's one position on the lowest leverage. And, as price continues to move, you could have added more positions. Maybe you had more than one position. Maybe you had, who knows? Who knows how many you have? Do what you got to do. But that's essentially an uptrend. That's how you enter a trade on an uptrend as well. That's what you want to look for. You want to look for that. And the reason why it's important, the reason why it's important is because of this. Where did that thing go? Just drew this. I didn't even screenshot it. Yeah, need this. The reason why this is so important, because this is also related to Wyckoff accumulation, which I'm going to break down in another video as well later on. This video is actually dragging on pretty aggressively, so I might just end it here, but and then talk about that in the later videos. But the same thing that you just saw down there, right? We broke structure, and then price came back to retest, and then took off for that 2,000, whatever it was. It was like 2,000. The same thing here. So, and print this in your brain right here. This is super clean. I'm going to drop this in the chat just for some value. People can have it. Yeah. I'll take that. And I'll see you guys on the next one.